Hi, Matt McAleer, Director of Equity Strategies, 16th of September, with Shaun Burgess, Portfolio Manager on our bond desk, specifically Munis, but a jack of all trades in terms of fixed income. Yes, well, the equity markets are like the weather this week, miserable out there. In terms of what you saw this week, you probably don't need me to fill you in on what we got in terms of that hot inflation print and so forth. Some of the sell-off, and you've heard me say this before, was due to positioning. And I like to talk about positioning because it's an area of the market that sometimes doesn't get touched on enough. There had been some action in the markets starting really the week before last week, which was a green week, where traders and investors were thinking and positioning themselves for inflation to start to dampen a little bit, right? To come down, maybe even get a positive print. Maybe not just the expected print, but see a reduction. Not only didn't we get the expected print, we're north of there. Immediate sell-off. One thing I want to point out is this has really become a trading market, and at times it can be tricky for an investor or for us as portfolio managers to switch hats that way. And it's important to really consider the capital you're managing to be separated in two buckets. You've heard me say that before. Long-term money and short-term money. Unfortunately, this year, you've had to be really short-term or nothing. As a matter of fact, let's take a look at a chart I had up on the 2nd of September, so 2 weeks ago. This is, if you recall, the percent positive weekly momentum for the New York Stock Exchange. And what this shows is how many stocks that trade on the New York Stock Exchange are exhibiting positive weekly momentum. And back on the 2nd, we had gotten down to about 44% of stocks, down from that 88 print back in August. You recall we said that's a hot overbought print. Be careful chasing that print. Fortunately, we've kept our cash intact, and I can touch on that in a moment. But I wanted to just draw a comparison to where we are today on that same chart. So we switched to our 9/16 chart of the percent positive weekly momentum and see we have crashed down through 30, and we register right at about a 20-22. Keep in mind, that's before today's action. We're probably going to be in the 16-18 area. Historically, this is where we want to start to look for a reversal higher in momentum. If you look to the left on this chart, you're going to see that reversals from prints down under 20, in other words, 80% or more of stocks are exhibiting negative momentum. When that reverses, we'll look to put a little bit of cash to work. Keep in mind, our positioning is, I would call it, somewhat defensive to extremely defensive. Tactical trend right in the 25% cash area. International right in the 17% cash area. In our US ETF, David Kotok's strategy, David's very defensive in here. We're sitting at 48% cash. Now, as that cash was being raised, there's a lot of questions client-wise. But what we're trying to do in all strategies is have a little dry powder in a volatile market. And Shaun, that's where we sit. I've taken up most of the time.
In this market, it really pays off having that slug of cash you can put to work when you see a good opportunity. I mean, it's just going to pay dividends.
We're going to keep an eye on these weekly momentum charts. They are more of a trading chart than an investment chart, but they can be timely.
Yep.
What'd you see in the land of bonds?
Where equities really took it on the chin. Bonds, it was a little bit more subdued short end, shorter term maturities, higher in yield, lower in price. You'd expect it off of that inflation print, which, by the way, caught a lot of people off guard, was very surprising. As you said, you had a lot of people positioning themselves to see that number, see some disinflation, that inflation number go down or turn negative. That didn't happen. So, short-term treasuries really moved higher in yield. Longer-term Treasuries largely did nothing on the week, and that's that risk-off trade. Investors saw that print. They went to the longer end of the yield curve. And remember, the yield curve, the short end is driven by the Fed. The intermediate and longer end is driven by the market. That's why you had a green day in long Treasuries after that inflation print.
Right.
People going risk
fear
off.
in the market Tuesday, fear in the market Wednesday, fear throughout the week. Money flows to that long Treasury.
Yep, and that's
been
why
a
largely
historic
flat on the
trade.
week because of that. So, it was definitely a tale of two markets where the long end really reflected investor sentiment and actually was flat. As far as munis go, very subdued. Munis have been drugged down by fund flows. We're still negative, so we're keeping a very careful eye on those. As you have, some cash to be opportunistic in your market, we're really looking to that longer end, those fund flows, driving some opportunities, and we're looking to take advantage of that. I feel like a broken record. We speak about them every week, that longer 4% tax-free. But when you look at that longer 4% tax-free in the context of a 30-year Treasury at a 3.5, doesn't make a lot of sense to be able to buy it. So that's what we're looking to take advantage of.
It's a value trade. We might not be thrilled with where rates are going, but you still have to look at where is their value within that move higher.
Exactly.
So, and that's been really the year-to-date thought is there's opportunity out there, and there will be some wonderful opportunities in terms of where you buy both fixed income and equity. Just have to be a little patient. Just have to try to work through this volatility. And again, as I say each week, we'll see what next week brings. It will always be a surprise. It's rarely exactly what you expect. Well, thank you very much, Shaun.
Not a problem. It was a pleasure, Matt.
All right. Everybody enjoy the weekend. We'll see you next week. Don't forget to like and subscribe, because with these markets as volatile as they are, we want you to be notified if we have a special note go out. Enjoy yourself this weekend.